Yo, yo, yo. Welcome back to the channel. Today's video, I wanted to open up. Obviously, today was an insane day in the markets. You saw Peloton absolutely jump off of a cliff. Um, Looks like it's finishing out a macro distribution, hopefully. But I mean, who knows with that stock? I thought it was done earlier, but it keeps going. And you saw Netflix here in post market had bad subscriber numbers. We're gonna talk about AMC, but I want to go through something right quick with Netflix because Netflix is down over $100 now in post market. And this is something that I tweeted about previously before this all happened, but I just wanted to remind people that Jim Cramer here on January 3rd of 2022 tweeted out the words Netflix buy. And since then, and I tweeted this out before, and I kind of made a joke about it, probably when it was around 15% down, I think, like around here maybe. And I said puts. But now after this dump, this puts Netflix down over 33%. In just a few weeks after this tweet. And the reason that I wanted to talk about this is because I just wanted to point out that this guy, historically has a pretty bad history of making these sorts of calls at really interesting times. And if you're familiar with the channel, if you're not new to the channel, you're familiar with us covering Wyckoff method. And as soon as he tweeted this Netflix thing, my first reaction was to go look at the chart and just see, because it's kind of a meme in the community. Like, do the opposite of Jim Cramer and you'll make money. But this is approaching levels now where it is just blatant. To me, this guy used to be a hedge fund manager. Okay. That was his background before he got into television. Everybody knows who Jim Cramer is, right? He's arguably the most famous financial based, like I don't want to say influencer, but personality that's out there. And this tweet is at a clear last point of supply in this Wyckoff distribution schematic that played out here. You can see this would be like that UTAD phase C space. This is like a phase D, and I mean, it literally there was no green after this tweet. He literally tweeted right before this major dump happened. And just wanted to point out as well that he just tweeted not too long ago, literally, I mean, minutes after this dump kind of slowed down, I guess, and said Netflix is driving entertainment stocks into bear market world, as if we are done watching. My thesis is we are at last out of time. So now he's fear mongering that we're going into a bear market, and maybe that's an optimistic sign. But I don't know. Let me know what your thoughts are on this in the comments down below. But let's get into the broader economy and get into AMC as well, just because there are really important things going on. SPY today. We've been talking about SPY on the channel because I have said, and especially going into this week, I was saying that I think that AMC has a chance for upside this week because I thought that SPY was going to be catching an uptrend, and it has not. This week, SPY was running into really key long-term bull trends, and so I thought that honestly the government was going to do something, put out some sort of news or something that was going to support a continuation of this trend. Now, long term and really midterm, I'm relatively bearish on the market in general, but I thought that they would continue to kick the can and keep this kind of rising wedge pattern going. But right now, SPY is in really critical territory. I mean, that goes without saying. Everybody knows this at this point. I mean, damn near all of retail is probably playing puts at this point. So that could be an optimistic thing, but let's just look at some of the key levels here and talk about how it can impact AMC. Right off the bat, what I'll say here is you are getting a bounce here in post market. I don't know if that's an overly optimistic bounce or not. Let's take a look. This is a key Fibonacci. This would be your 618. If you base it on this bottom here, 426 back in October of 2021, you are hanging out in your golden pocket right now. So that is a good spot for you to get a bounce, and maybe it's a temporary relief, or maybe this becomes an overall bounce for the market. Let's see. I would call this the local bottom for this move. Let's see what Fibonacci SPY grabbed onto. See, this one held at a 0.5. So yeah, you can see that this is a more significant drop than we've seen from recent lows to recent highs on Fibonacci. But obviously, SPY likes to respect these round numbers, right? So 445 right now, what it's sitting on is definitely going to be a key like round number that it's going to want to hold above. And then from there, I do think that 440 is relatively possible tomorrow. I'm really hoping for a bounce here, just for general economy's sake, and I think you should be seeing continuation. But it is getting harder and harder to draw these uptrends, right? And I'm not trying to sit here and say that you should just keep drawing uptrends, but it is relevant to say, okay, well, you're getting a temporary bounce here. Is there justification for this bounce, right? So you have this bounce here, rejection, rejection. So now this definitely is acting as support in the short term. And you can break below these lines, by the way, and round out underneath them, right? So you can make a move like this where you break down underneath, and then you come back and work your way back up, and then you break back in, and you're not gonna say, oh well, yeah. What you're gonna say is that was a bear trap, right? You broke down below the trend, and then you had continuation. So it still would be a valid trend. Let's see if there's historical precedent for it, as we like to do on the channel. You can see here that, yeah, I mean, this is a pretty heavily traded zone. You have rejections and supports all along this line. But I will say that over the course of the past, let's say, yeah, I mean, from a relative standpoint, you would say that over the past, over the course of the past 10 or so years, you would say that you are in relatively overbought territory when you're above this line. So just be aware of that right now, because the general economy right now could be slowing down. And I have seen shout out to, I think it's Robbie _Brown. Let me just make sure that's what it is. Oh, I should search it in Twitter. Sorry, I've been digging around in Jim Cramer land. So it's Robbie _Brown 13. This profile here. He did show me a pretty interesting interpretation of recent SPY charts. And we're gonna talk about how this impacts AMC. Just bear with me. He did tweet at me some pretty interesting SPY charts last night, I believe. If I could find them. Jeez. Should have been more prepared. Just prepare for your videos before. Anyway. That could show this as it is a more optimistic viewpoint for continuation to the upside here. And showing this as you can see, this compared to this, and even further back on SPX, by the way, is a relatively oversold zone. And if you look at this through the lens of, like, if you were to turn this over, like, and make it more parallel, it does resemble an accumulation schematic, right? But we know that, and we know that SPY generally has this, like, continuation upwards, and it does these accumulations and distributions in a more upwards fashion than most stocks do. Now, whether that's healthy or not, I don't really know, and we won't know until we look back on this moment in time historically. But anyway, so with that, AMC was up, I believe, 10% at one point today. Let me go full screen here. Yeah, I believe AMC was up 10% at one point today. Kind of opened up really hot, just kind of blew up out of open. And then you can see that you had this pretty nasty. I believe this is a gravestone doji candle form here on the second hour of trading. And then you got sent right back down. And that's why we've been covering SPY, because the same thing happened with SPY, right? SPY kind of blew up out of the gates. Everybody's like, oh, the bottom's in, and then all of a sudden it just curls over and starts dumping. So the things that we're looking at with AMC, we're going to go to the daily chart, are the same. We're not really changing our perspective. Nothing major has happened, honestly, with AMC the past few days. But I just want to put out a reminder here as to what we're watching, right? So we are still watching this as a falling wedge, and it's not a confirmed falling wedge, but you do have reason to believe that you are developing this falling wedge pattern here. You have a few different ways that you can draw it. You can say here that you are at a more aggressive downtrend here, while you're having this lightning, right? If you draw from here, you say that these are your bottoms. Where does my arrow go? Right? You are seeing, oh wait, I'm doing different arrows now. You are seeing that that selling pressure kind of wane in the longer term kind of consolidation that you're working on here, this general sell-off that's been happening since June. The lows are just less impressive is what I mean by that, okay? And so generally that is indicative of price reversal in the near term. And then what happens from there is really dependent on volume, right? So I'm not calling for the moon after this, but what I am saying is that generally speaking, as this sort of trend, it's just a signal of trends shifting, right? Some other lines that you can be drawing now are, let's separate these a little bit more distinguishable, just so you know. So we'll do the red one as one. And just remember, all of these lines are relevant to all of the other lines, right? So like they're all relevant trend lines. Don't think that I'm saying, oh, this one has to go with this one or whatever, right? You have a trend line that you could go off of here with these bottoms here. And then again, they can all interact with each other. And then there was one more. I wouldn't say that this one's really on the table. And then an overall downtrend line is definitely what I would want to draw here. Make this. Okay, so you're definitely watching for this. I know that the lines are getting a little much here. So let's just focus on the wedges, what we have here for the wedges. And then what you're going to be looking for is when you break out of one of these downtrends, right? And again, I mean, look at the lows that we're creating here, okay, guys? Like, this is definitely some stuff that's on the table. I do project more consolidation in the near term, okay? I don't think that you're just going to get an explosion. If you break out of here, if you find this red line as support here, and then you find a way to break out of this blue zone right here, and that would be up to like $20. Oh, look, my prices are smaller, dude. Sorry about that. Making them larger now. Look, I made them really big. Somebody said make them even bigger, so I made them even bigger. Look at that. So yeah, if you break out of this blue wedge here, you're still gonna have to deal with this downtrend here, the red zone. So what I'd imagine it would look like if it did happen is you would break out here, and then perhaps you would get rejected at around 2350, and then come back down and retest this blue falling wedge, okay? And then you can kind of crawl down this thing for a few days and then come back and retest, and you would be looking for a breakout on that zone. And that's how these trend lines, you got to be mindful. Like, there are a bunch of downtrends, right, that are happening here since June. But you also have a lot of uptrends that are supporting you since January, right? So these trend lines are all constantly battling each other. And we've looked at a bunch of different ways to view the chart, but that is definitely one of them. So just be mindful of those trend lines. And dude, you guys definitely download TradingView. It's completely free to use. Download it on your phone. You can get it on your computer. You can even use it in a browser mode, and just draw these lines for yourself, right? And get familiar with the lines, and go back in the history of this chart and other charts and see how those trend lines interact with the price, right? Like you can just go back to previous regions of price and say, okay, let's see. So you can see that you had a downtrend here, right? And once you broke out of this downtrend, you got some relatively quick moves to the upside, right? And the reverse will happen when you draw those uptrends, right? So you have obviously uptrends that were developed. And then as soon as you broke these uptrends, right? So an uptrend from here to here in green, you broke underneath it, you came back and retested, and as soon as you couldn't get back over it, you dumped. So just pay attention to those things, okay? It's just good practice, and I know that a lot of people want to watch the channel, and they come to the channel, and they say, just tell me what you think's gonna happen, but like that's not really the purpose of the channel, you know? Like I have people all the time. Oh, by the way, this is for all of you guys. I was bullish going into this week. I think I mentioned this already. For those who say he never says he's wrong, I have said multiple times throughout live streams this week, as well as in my videos, that I was wrong about my assessment when it comes to SPY and AMC this week. I can take full responsibility, right? And you guys are gonna now what they're gonna say is this is the first time you've ever done it, which I don't really care. But I think that what really matters is process, right? And so I believe that over the course of time, my process is going to work out. And it has worked out in a lot of scenarios when it comes to AMC analysis. But those people don't want to recognize that. They'd rather just burn somebody at the stake, right? Probably because they're personally frustrated with their position. They mismanaged it. And rather than looking to better understand what's going on, they just say that I'm FUD or I'm a shill or whatever. So I understand those people are just looking for a way to get attention or some sort of satisfaction out of their behavior on social media, and that's fine. You guys can make me your punching bag; it doesn't matter to me. But anyway, let's talk about those relative downside targets that we've talked about in the past. Just an update. And by the way, that's another hysterical thing about this is that over the course of the past week, I don't even know if I've even not week, but weeks and maybe even months at this point. I don't know if I've even brought up upside targets, like long-term macro upside targets. I have generally only talked about downside targets. And so for people who are just like, yeah, you know, these YouTubers are calling for the moon every day and everything like that, like this channel has not done that. It's actually quite the opposite. I don't even talk about my upside targets. And a lot of people ask me for that, by the way. But in the meantime, I just feel like we have resistance lines that we have to break through before we start talking about upside in the short term. That's just how I see it. So, and we're obviously in a downtrend. We keep breaking support, right? So we need to talk about what the downside possibilities are. So what are those downside possibilities? What are we talking about? So I'm going to do the same methodology that we've been doing in the videos, but there's always new people, you know, so I want to be, you know, be open with them, let them know what I'm seeing, have them connect with my process. In the previous cycle in January, after the buy button incident occurred on AMC, if you measure a Fibonacci retracement on log scale from the bottom in January to that top, you get this situation where you kind of hung above this 618 Fibonacci, right? You hung above your golden pocket. And if you measured that same Fibonacci, right, from the bottom in January, right, February, the buy button collapse to the top in June, you get a 618 of $14.50. We've talked about this for some time on this channel, and I do want you guys to be mindful here. Look at this, okay? On the 4-hour chart, you can see it pretty clearly that we are hanging underneath this 0.5 Fibonacci, and right now we are getting rejected. Let me see what the volume looks like on these moves, because this is pretty important right here. Volume does favor bulls here, okay? So that's good. So on the 4-hour chart, that's pretty interesting. I would say volume is favoring bulls here in the relative short term since January 14th or so. So since you've been getting rejected down here, let's look at the 1 hour just to see more detail. By the way, I'm not like sad or anything. Okay, let's see. Let me look at OBV and see what the result of this is. since the 14th, yeah, you are lower uh, overall than you were on the 14th. So it's actually favoring bears if you zoom in a little bit closer. So what I'll say is right here, you're clearly at an indecision point, okay? And you're getting rejected. Right now, you're getting rejected by the zero point 0.5 Fibonacci. So be mindful of this. You come back up, you're going to want to watch this 1975-ish level, okay? Because if you keep getting rejected by this, then what it's going to say is, hey, we need to go down and test lower ranges. That's just the reality, okay? And that would be kind of your signal for that 1450. Now, the thing about 1450, we've talked about it a couple times on the channel, is I believe that it is going to be like the most critical support. I mean, this is insane support, okay? You got hard top rejected 3 times before the rally in June at this level. And so if you fail this level, you are essentially saying that this is a new level that needs to be tested. The range, okay? So the range from about $8.50, right? $8.50 to about $14.50 essentially needs to be traded. Now, again, if you break it, but then you test it, get rejected, and then break through it again, and then you find it as support, then this zone is pretty much off the table. But you just have to be mindful of that. If you get rejected down by this, and then you make a lower low, right? So what that would look like is if you broke down here, you tested it, and then you made a lower low on this, that would be a pretty strong signal at that point. Like, so if you went to like $12 or something, that you would be coming down here and testing $8.50 ish, okay? Because that's the bottom of this trading range back here. So just be mindful of that. And then from there, you're essentially going to be looking at like $7.50 to hold you above $5, right? So that would be like the levels logic behind the future moves. On the flip side of that, in the short term, the levels that you're looking for to breach for a more bullish case are going to be your recent rejections, right? So you see here when you drop down to $20, you tried to hold it for a little while, and really you held $20 for this entire range. You tried to hold it here for a little while, and then you got rejected down, okay? So you're going to want to break, first you're going to want to break 1950. Then once you break 1950, and it's, these psychological even numbers, you're going to want to really break above 2050. If you break above 2050 and you can hold yourself above there and then make a higher high, so what that would probably look like is this. You're going to break up here if you did this, come back down, test 1950, find it as support, maybe find it as support one more time, and then you break 2050. You'll probably get a nice rally there, and then you'll get rejected down by another key level. Find that 2050 as support. If you break back down, then that's pretty bearish, okay? But if you can make a higher high on that 2050, I think that you're pretty much going to confirm now that you're not going to go back down below it at that point, okay? So that would be my opinion, not financial advice. Obviously, always opinions here, just showing you my logical explanation for what I'm thinking, what you can be seeing, the type of things that I'm watching, right? We can look at long-term trend lines to see if there's any confluence with this level being held as support. Maybe you would say, let me see. So you have 2 touches back here after the buy button collapse that established a new uptrend. You have a little bit of room down here before you get a touch. Let's do, and you do see here that you kind of hung this hammer here. You had a rejection here. So this is a nice little trend line. So I'd imagine if you came down, I'd speculate that if you came down here in the next few days, you'd end up around this $16, $17 range. That's a potential trend. And again, these are potential trends to hold, okay? So if you measure from here, you have these 3 touches back here and before the June run. That's kind of right where you're sitting now. So I'd imagine if you don't hold this as support, like, again, you can break below it briefly, but if you get rejected back down, You'd come back down to this like 1650-ish level, and again, we're just looking through different lenses, right? We're trying to look at the chart and understand the chart from a bunch of different ways, not sitting here trying to confirm our own bias or anything like that. And I'm seeing an example right here too of this idea of when you come up and get rejected by a key level, right? See this? This was a previous bottom, right? You came down, you tapped $28.80. Back here in November / beginning of December, you broke down, kept trying to find it as support, right? Broke down again, but then you popped back over. So what you were looking for back here, and this is just an example that you can apply to this new trading range if you want to go in and practice yourself. What you were looking for here when you broke this level was a confirmation of a new level. And you look, I can see one right here, right? You see this $32, this bottom right here, you popped off here, you retested it, and then you blasted off. Once you got that good volume to back this move up, you had continuation to the upside, right? So what was happening technically back here was you broke down below here. Oh, boom. That was your previous low, right? Okay, well, let's test it. Boom, 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 boom. And then you broke up and you're like, okay, we're going to test this level here, the 3250 kind of level. You broke up above it, didn't have supporting volume, got rejected down. And then once you got rejected down from here, it basically invalidated, right? It invalidated this move up from a technical perspective because it said, look, we broke down here. Now we tried to come back up, get a bull rally, and then there wasn't supporting volume. And I know, fake volume or whatever you're going to say, right? I'm just looking at the chart objectively. And then, so basically the implication is, okay, well, now we have to go back down and test lower levels. And that's why you came all the way down here, because that was the next relevant level of support based on the previous highs that AMC had seen, right? The 20-ish dollar level. So that's just an interesting way to look at support and resistance. Just another kind of feather in your cap. You come up here again, retest this level, fail the level again. Come back, retest this level a bunch, right? This is good, right? You're kind of, again, that's how these wedges are formed. I mean, I will say that, right? You're coming down to these levels, you're seeing more and more support coming in. Look at the volume, right? The volume down here at this level, this reaction, bulls, was much stronger than any other bullish reaction we had up in this $40 to $50, right? And yeah, we got rejected back down because we didn't find the support up here. And basically what you're trying to do is you're trying to find new levels. You're trying to find where is that bottom, right? That's what the institutions are trying to do in this theoretical kind of situation, right? And remember also, we do have this gap down here at like 1670. Oh, didn't we say that was like a line? Yeah. Yeah. If you came, what did I correlate that with? Yeah, this overall downtrend. Yeah, you could come here and get this confluence, fill this gap, and then get rounded out. Totally possible. I'd say that this will probably be a relevant level before you go down to that 1450, just based on what I just noticed on the chart. And again, look, I'm not perfect. I'm just analyzing the chart in real time with you guys, trying to show you guys how I'm looking at the chart. And I can look at this chart all day, every day, and find more and more new things. Just some interesting ways to look at this chart. So I've shown you bearish and bullish scenarios. We talked about Jim Cramer and Nflx. Oh, by the way, I just want to talk about some other examples. I remember before Didi, which was like a Chinese Uber competitor. I don't know if they only operate in China or what, but it was like late June whenever they were going to get listed in July 1st, I think, for their IPO. Jim Cramer literally said, get as many DD shares as you can before their IPO. And since then, the stock absolutely, I mean, literally, dude, this guy, look, I get a lot of shit for being wrong on my calls, but this guy, dude, Right now, you're down 70% on this. Okay. Um, and also, this stock is being delisted. So it's in the process of actually not even being on the New York Stock Exchange anymore. So that's pretty interesting. And then usually when he's calling for like good things in the economy, bad things happen. I know that just recently in December, he said something about how the economy is as strong as it's ever been or something like that. I couldn't find the quote. He didn't have a tweet, but it was like a uh he was talking on either his show or somebody else's show, whatever. I don't watch the media. I don't watch like TV, you know. So, but but yeah, dude, I will say, man, like just looking at the SPY again here, this does look like a. I mean, I know that SPY generally is in a distribution right now, but this looks like a sign of weakness in a distribution, and this is a even lower low here. So that's pretty bad here. Oh, you did the same thing here, didn't you? Why so weird, man. But yeah, so um I don't know, you know. I also it's kind of weird that he can just say buy a stock. Like he can just tweet out buy Netflix and then like if it dumps, you know, like does why doesn't he say like not financial advice or something? Does he have like a license or something to do that? Just wondering. But anyway, that's the video. Hopefully you guys enjoyed. I know I kind of rambled on and went a little long on certain ideas or whatever, but I just wanted to talk about those things. Hopefully you gained something out of the video. If you did, make sure you smash a like, drop a comment down below. Let me know what your thoughts are on AMC, Cramer, whatever. Oh, and by the way, yeah. So look, I'll just draw these lines. Like $30. Like once you start getting that upwards momentum, these are going to be the key levels that you want to break. You break $30, reconfirm it as support. Boom. I think that you can see 45 relatively quickly. And obviously, there's going to be a little bit more nuance. But you've already consolidated so much in these zones that you've kind of confirmed a lot of supports and resistances, and that's how you get those bigger swings up, right? Is you've relatively and there's my computer lagging, by the way. You've already consolidated so much, right? When you go through these sorts of accumulation slash consolidation ranges, that you've built up support and resistance, and by the time that you get back to these levels after you get sent down, right? You find that ultimate support zone, you kind of can just blow right through them, right? Because there's no like, oh well, we've already found support and resistance there. We found strong support here. We've established this uptrend, right? This is the logic behind the chart. We've established this uptrend. You find this new relative bottom, boom, you can just kind of blast right through. And then once you broke this level, after all that consolidation, really there's nothing in your way, right? You said, okay, we came down, we tested all these lows, we tested all of these areas, and then now, boom, you come back, you retest, you find that strong support again, behaving as a trend line essentially. And then look, you had a little bear fake out here, and then whoop, you just get sent up because now you're in price discovery. And until the buying volume slows down, you're not gonna slow down in pricing, right? That's how it works. That's like one way to look at it. You know what I'm saying? The stock, stocks and charts and stuff, they're complicated, but there are a bunch of different ways to look at them, and you can simplify the process for yourself. You just look, I like to look at things through a bunch of lenses because I'm a super analytical guy. What I would say for like the normal average everyday person that's starting up, if any of these ideas captured your interest, just go find that one idea and then apply that to a bunch of different charts and find what works for you, right? Like just find the thing that kind of catches your eye and makes the most sense to you right away. And then you can kind of expand and learn more things. That's what I've done at least. So hopefully you enjoy the video. Again, I tried to close the video like 5 minutes ago. I'm going to close it now. Have a good rest of your day. And tomorrow is Friday, the 21st. A lot of options are expiring on AMC tomorrow. A lot. Like 1 million or something. Over 1 million open interest expiring tomorrow. So it should be an interesting day. Puts and calls are going to be trying to get each other in the money. So Watch out. Oh, by the way, when it comes to that $20, like fight for $20, $21 or something, I'm not trying to be a FUD, but if you're still watching the video, you probably know that I'm not like a FUD person. I do want to just talk about some of my experiences with these organized retail kind of events that I just recently, saw, like just examples, right? So if you look at Bitcoin's chart, look again, I'm not trying to be a FUD here, but El Salvador legal tender. When El Salvador uh, adopted Bitcoin as legal tender officially, it was September 7th, 2021. Okay. And everybody knew that this was the day that it was going to happen. And retail, you can look into it. I can't remember exactly if the day had a name or anything like that. But Bitcoin was on this nice little uptrend here. And on September 7th, it was a thing that I saw on Twitter that was going on that was like, hey, everybody buy $30 in Bitcoin. And we're gonna pump the price of Bitcoin on September 27th to celebrate the adoption, right? To celebrate it being legal tender. And then Bitcoin absolutely dumped on this day. I remember Ben Cohen tweeting out, hey, I think everybody's hitting the sell button instead of the buy button, because it was just this hilarious like dump fest. And my thesis on this is that institutions see this, oh, look at all the retail, or maybe they even start this. Look at all the retail. They're talking about how everybody's gonna buy at once. By the way, look at this pretty clear rising wedge. They're all talking about how they're all gonna buy at once, and they're like, okay, that's exit liquidity. Like, we know that we're gonna have buyers if we sell. And then you also had Doge Day. Pull up this chart. This is me not ending the video again for like the third time. Doge Day 2021. Let me see if I can find the date right quick. Oh, yeah, it was 4/20, 2021, right? So let's look at 4/20. Because I remember Doge Day as well. Doge Day was, I was like, I don't know about this. This was before the El Salvador thing. Yeah, so 2020, April 20th, 2021, right? So remember, this is when Doge had hit recent all-time highs here. You came here and you had this double top at like 40, 45 cents. And then you had Doge Day, right? So what was Doge Day? This is the 20th. During Doge Day, retail all was like, oh, we're all going to put $100 into Doge at once. And then boom, you just get this nasty sell off of like 36%. Holy. Wow. I didn't even realize that it was that much. And then that ended up leading to like a 67% sell off. So just be mindful, Then you also had that Elon thing. He was going to be on Saturday Night Live, and everybody was like, oh, he's going to send Dogecoin to $1. He's going to say something that's going to cause it to go to $1. And I remember this day too, because it was just an absolute dump fest. Let me see. Elon, SNL, Doge. That was on. That was on May 9th is the report. Let me see what that Saturday was. Just some interesting stuff, I'm not trying to be negative. I'm just saying, it's something to think about. Saturday the 8th. So, yeah, right here, look, May 8th. From there, that was, oh yeah, Elon's gonna send us to the moon, right? And then this was all day Saturday. And then that ended up being the all-time top before he ever went on Saturday Night Live. And then now you're down. What was this? Tell you what, the only person who can dump Dogecoin better than Elon is good old Dave. Now, I mean, he beat me, dude. Down as much as 83%. Right now, you're down 80%. So, just some things to think about. You know, just look out for those sort of like those narratives. And I'm not saying that whoever has started that narrative or whatever, you know who you are, dog. Is doing it nefariously or anything like that. But I just don't never risk more than you're willing to lose on any of these sorts of plays. Okay, that's what I'll say. Not financial advice. You do whatever the fuck you want. If you want to buy fucking all, put it all in on AMC, that's totally your right, dude. Free country or world or whatever. All right, that's the end of the video. I'm not gonna say anything else. Have a nice day. Holy shit! Tomorrow is $21. It's January 21st. Let's see what happens. All right, love you guys.